Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will discuss the Kaufman Adaptive Moving Average (KAMA). This is a adaptive moving average developed by Kerry Kaufman, and here we are going to see its uses, and we will not really go into the its calculation, how it is calculated. You can just google it and see the calculation. It's a fairly complex three-step process, and for us that will be done by our platform, so we don't really need to be bothered with the calculation. All we have to see is how we can use these Kaufman's adaptive moving average to design a profitable algorithm. And if you see the short description, this is a moving average which is designed to account for the market volatility, or you can say noise. The up and down moves on a chart, and it will closely follow the price when the price swings are relatively small, and the noise is low when the volatility is not much, and basically the price action is a kind of range bound. We will have the KAMA following the price action pretty closely, and when there is volatility, when the price swings are wide, in such scenarios the KAMA will follow the prices from a larger distance. This is a trend following indicator, and it can be utilized to identify the trend and turning points of the trend, and also to filter the price movements. So let's get started for today's session. Here we will add the block of KAMA to this Visual JForex board for developing the automated trading algorithms. So here, as you might be aware, as we have done plenty of times, any of these start point can be chosen, and then you can simply iterate the block with any of the start point, and here you will have the description given as well. Now coming to the blocks functions, we have to provide the input values, and then we will have the output values, and also we have to define the settings. And this block is the building block for the algorithmic setup, and let us also add this on the chart so that it will make our understanding easier. Let me do a quick search of KAMA, okay, Kaufman's adaptive moving average. So as you can see, and as we have already talked about it, that whenever the price action is in a range bound manner, the Kaufman's adaptive moving average will be following the price action closely, as you can see from the chart, and whenever the volatility is higher, the Kaufman's moving average will be following the price action from a larger distance, from a greater distance. And here the volatility is a critical factor. Even in the calculation of the KAMA, we take into account the volatility. So the calculation of KAMA is a three-step process, where first we have to calculate the efficiency ratio, and then we have to calculate another constant, and unfortunately I forgot the name of it, and then using those values you have to calculate the KMA, and in this scenario we will be trying out some combination and how we can use this moving average for our algorithmic setup. First thing is, we can take a couple of KMA blocks and we can do the comparison. Otherwise we can simply use these price actions where it is, if it is above this moving average, then that will be indicative of the fact that the underlying momentum is bullish, and if the price action is concentrated below the moving average, then that will mean that underlying momentum is bearish. So we can use this that way as well, or we can take multiple KMA and we can define it with different parameters, and then we can use the crossovers or in another manner whichever you deem fit. So all it boils down to is to the input values which we are going to put in, and with those input values playing a key role, we will have the different outputs. So here we have to define this. First thing first, we have to choose which instrument we want to trade on. So if it is euro usd, well and good, you don't need to change, as the euro usd is the instrument of choice for this platform. And suppose if you want to make the change, then all you have to do is choose that instrument from this drag down list, and you will have it. We will keep the euro usd as it is. Then the default period, here it is mostly defined for 10 minutes, but as we have talked about many times, it can be anything starting from 10 seconds to 1 month. So as per your convenience or as per your setups requirement, let us for example take 30 minutes. So we do the charting on the 30 minutes as well. We change this to 30 minutes. Okay, alright, we have changed the chart to the 30 minutes, and now this KMA is being calculated on the 30 minutes time frame. And as you can see, it's trying to follow the price action, and whenever the volatility is fairly limited, we have this KMA sticking pretty close to the closing levels of these half an hourly candles. Now moving to the another parameter, we have to define the shift. Shift is the look back period. So here if you take the shift as 0, then that means the current price will be taken into account. If the shift is 1 or 2 or 3, then depending on what is the value, we will be going back by that many candles in time. So suppose if it is 2, then we will be going back 2 candles, and we will take that candles KMA value. So that's how it is going to be, and we can use this configuration to do the comparison. Suppose in one block we use shift value 1, and in another block we use the shift value 5. So you can take these two different KMA values and do the comparison. If the values are on the rise, then that means it will be indicative of the fact that momentum is on the bullish side. If the KMA values are falling, that will be indicative of the fact that momentum is on the bearish side. So you can use that as well. Now coming to the time period, so here this is the crucial. On which time period you are doing the calculation makes a lot of difference. So here if we use this edit option, and suppose if we change this to say 50, then you will have the KMA defined differently. So as you can see, because we are taking more numbers of candles into consideration, here we have these more smoother KMA, and it is also giving a better idea. I can't really say better, but still visibly it's showing less volatility, and it's trying to follow the price action to the extent possible. And whenever the underlying momentum has been strong, it has done fairly good job. Here we have these up and down moves, but that's going to happen in most of the cases. But apart from that, if we use this indicator in a combination of another indicator, or say some other uh, factor which will complement its trend detection ability, then I think this indicator is a useful indicator, and it's also fairly popular amongst many of the technical traders who use this adaptive moving average. It's basically a derivative of the EMA, and here we are taking into account the volatility as well, and that makes it more intelligent. Now coming to the combination, here we have the two MA periods which needs to be defined, and this makes a lot of difference. Suppose if you use this fast moving average fast MA period of say higher value like 5 or 10, then you will see drastic changes in the output value for the KMA. And here I will show you by the example. Let us see that we make this fast moving average as test. Then all of a sudden we have this KMA which is following the price action from a long distance. So it makes a whole lot of difference in how this KMA is being calculated, and it's a lot less smoother as the moving average of the faster type has been increased. So because of that we have these less smooth KMA, and now if we again reduce it to say 5, still the distance remains high, but at least to some extent we have this more smoothing, and the price action is more converged with the KMA. And you can take like multiple KMA with a different fast moving average periods. So suppose for example let us add one more quick search KMA. Okay, so we have added one more, and let us edit it to 2, and even not making many changes, just by simply changing this fast MA period. So here you can see this whole lot of difference, and what you can do is you can use this lower version as a longer time frame trend detection indicator, and then this upper one can be utilized to act as a entry or exit point. So whenever the cross happens, whenever the price action crosses above this, you can also use that as a one parameter to make entry in any trade. And as you can see many a times that is happening, the price action drops below this, and then eventually again after the correction and consolidation the price action starts to move higher, but it is not really breaking below this KMA which we have defined with the fast MA period of 5. So here this kind of combination can also be used. So you have to do a bit of experimentation, and you will be able to figure out some combination on your own which you will see that are kind of working very well, and these are providing you some combinations, some setups in which you can have decent confidence that algorithmic setup will be profitable if you use these combinations. So here you have to experiment and see which one suits your purpose. Now again let us try changing the slow MA period. Suppose if we make it 20, then also a whole lot of difference comes in, and now the KMA has got drawn closer to the price action here. Earlier we had on the lower side, and now it has converged with the price action, and here we have this KMA, and the combination you want to use can then simply be put into the algorithmic setup on the Visual JForex platform. All you have to do is take multiple KMA blocks, and then you have to do the comparison, and the output values will be there, and all you have to do is get those output values in the if and else statements, and whatever are your requirements you design them, and then you will have your algorithmic setup working just as you would if you were to sit in front of the computer So instead of you needing to sit in front of the computer, your job will be done by the automated algorithm which will be running on the bank servers or on your own system. And this is a opportunity provided by the bank because of this development of the Visual JForex. And it is going to save a lot of efforts, and also it is a lot more discipline than we trading manually on our own. So even I personally prefer to trade with this Visual JForex setup and develop the algorithms here and then deploy them. So you can use these combinations, these indicators in whatever configuration you feel are likely to prove profitable, and then design the system accordingly. So that's it from my side for today's session. I hope you have got the point and you have been able to understand the workings of the KMA and how it can help you design an profitable algorithm. So that's all from my side for today's session. See you tomorrow. Goodbye.